Welcome first-time homebuyers and folks looking for home financing. These are the 6 steps to getting a mortgage. Now, the very first step is to get pre-approved. Basically, pre-approval means once you filled out a loan application, provided some documents, and the loan officer has compared your application against the underwriting guidelines of Fannie Mae or Freddie Mac if it's a conventional loan, or the guidelines for a jumbo loan, or any guidelines for a VA, USDA, then you are pre-approved. Now, this is different, as I mentioned in another video, versus what a pre-qualification is. Now, while a loan officer is obligated to provide you a pre-approval letter upon your request, I highly suggest filling out your loan application, providing your documents, and having your credit pulled so that your loan officer can do what we call pre-underwriting, which is matching your loan application against the underwriting guidelines for the loan that you're seeking. Now, once that happens, the loan officer will be able to provide you a pre-approval letter so that you can start going house hunting with your realtor. Now, once you found your home and you submitted your offer and your offer has been accepted, the next step is for you to receive your disclosure package or your initial disclosure package. And that's going to be done once your loan officer has registered your loan. This can be different depending on if they are a broker or a lender, but once they did their initial submission, you should be receiving your initial disclosure package, which is going to include your uniform application as well as your 4506Cs, your intent to proceed, as well as a few other documents like your loan estimate where you're going to be reviewing and signing off on. Now, number 3, once you've reviewed, acknowledged, and signed your initial disclosure package, the next step your mortgage loan originator is going to do is fully submit your file to underwriting. What this means is they're going to take your application with all the documents that they've collected from you. Now, if they were thorough, they're going to collect everything that they know they should, because if they don't and they fully submit your file, typically what's going to happen is your loan is going to get suspended. What that means is these days, an investor or a direct lender or the underwriting team, they're going to provide you a conditional approval within 24 to 48 hours. Now, if you do not get a conditional approval within 24 to 48 hours for your loan, that means that your mortgage loan originator did not most likely collect all the documents necessary at the very beginning of the process. So make sure there's a 24 to 48 hour window for you to sit tight, and from there you're going to receive the next step, which is the conditional approval. Now, during the fully submission process, one thing to note is during this time, most likely you're going to be ordering your appraisal and locking in your rate as well. And as I said at the end of step 3, the step 4 is for you to receive your conditional approval. And as I mentioned, conditional approval usually comes around 24 to 48 hours from the time that your file is fully submitted to underwriting. Now, note, if there's holidays like Christmas or New Year's or any other major banking holidays, then it's going to take a little longer, but 24 to 48 hours business hours, I would say, or business days. So 1 to 2 business days is what you're going to be expecting. Sometimes underwriting teams work on a weekend like a Saturday, but most of the time it's going to be skipping and going straight into a Monday or Tuesday if it's fully submitted on a Friday. Now, what a conditional approval means is your loan is approved with the condition of satisfying certain items. Okay, so it could be they needed updated pay stubs, updated bank statements. Maybe you only submitted 1 month of bank statements and they needed 2. It could be you're missing your homeowners association due statement. We know that this is really tedious and hard to obtain from the homeowners association. So it could be a long lead time. It could also be you needed to order an appraisal and we're waiting for the appraisal to be provided or completed and provided. Could be also your homeowner's insurance policy is waited on. You're buying a new house, you're still shopping around for your homeowner's insurance, and you haven't identified one yet, and all you did was receive a quote, and we're waiting for the insurance policy to be provided. Now, step 4, once all the conditions are satisfied by you providing all the documents and the information that's being requested by the underwriting team, then most likely you're going to move into clear to close. Now, what clear to close means is that all the conditions are satisfied by the underwriting team, and then the underwriter has signed off on your file, and it moves into the final stage where your file is under review by the final audit team. And what they're doing is they're going through a quality control check to make sure that nothing looks off, that the underwriter has done their job. So they're going to do a final QC, not at the thoroughness of what an underwriter does by calculating all the debt to income ratios, the loan to value, looking at all the documents, but they're going to do a quick scrub of your file to make sure that the major things has not been missed. From here, they're also going to be balancing the closing disclosure with the title company. And what that means is it's just like balancing your checkbook. The closing department has a closing disclosure that they've created. The title company has a closing disclosure that they're maintaining, and the two are speaking to each other to make sure that the figures balance and tie out, that they match. Once that's done, then you will be receiving your closing package. Now, once the closing package is received, you've gone through your settlement, signed all of your documents. It's gonna be a lot of documents if you're in the US. It's gonna be from anywhere from 100 to 150 documents. If you're having a hybrid settlement, you might have done some e-signings or maybe a virtual signing of sorts, but it's gonna be a lot of documents to sign. Once you've done that, if it's for a purchase, then your loan is funded. Now, this is the most important step because the loan has to be funded in order for this whole file for your mortgage to be processed and for you to obtain a mortgage. If you really like this video, then you'll probably enjoy this other video where I clarify the differences between a pre-qualification and a pre-approval, as well as another one where I speak about how to make your pre-approval letter not worthless. Thanks for watching this video. I hope you consider subscribing and hitting that like button, and I'll talk to you next time. Thanks.